Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 23rd of May, 2019. Gorgeous day outside, probably the most beautiful day of the year so far. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off again, except yesterday it was somewhat risk off. Today is definitely risk off. Crude has tumbled almost $2, trading down 180 from yesterday's settlement, or almost 3%. The DAX is taking a bit of a hit, down about 200 points or 1.65%. Euro stocks down 50 points or 1.5%. The Nasdaq's down 91 points or 1.23%, and the Russell is down 16 points or 1%, followed by the Dow, the S&P, and so on. Uh, risk is off the table. Allocation is to safety this morning. That's the overall sentiment. The gold has popped a little bit higher at $6.50, up 0.5%. And the bonds are up 22 ticks, which is a fair amount. The German Bund is up 41 cents in the futures, and the yen is up, as well as the 10-year note is up 8 ticks, 8 big ticks, or 16 small ticks. So that's where we stand. So clearly, coming into the market with a risk-off sentiment, some selling overnight. Okay. Um, Overall, what's pushing us around this morning? Uh, it's always a bit of a speculation what that is, but the Japanese came out with their prelim PMI manufacturing, which slipped into contraction territory on trade fears as new export orders fell at the fastest pace in 4 months. Um, China's MOFCOM, whatever that is, reiterates U.S. actions have escalated trade tensions. China will not make concessions on key major issues, will protect American companies' interests in China. Uh, the also Germany registered manufacturing PMI registered the fourth month of contraction, as a year ahead output expectations fell to a 55-month low. German IFO business climate also fell in May and missed forecasts, and so on and so forth. Tons of kind of negative macroeconomic news there. So that's where we are. There was a small pop higher just now. Well, not just now, about 20 minutes ago. And that was White House Press Secretary Sanders says President Trump's willing to talk about Dreamers as part of an immigration plan. It's the only thing I saw. But really, what probably moved this is the White House wants to move forward with work on a debt limit. Discussions are continuing at the staff level, and so on. I'm not sure, to be honest with you, why the reaction was to pop higher by about 6 points in the ES, to finish at a collision area at 2837. Really, to be honest with you, at the moment, the news versus the reaction on the news isn't making much sense to me. It just seems like, give me a reason to buy and I'll buy, and give me a reason to sell and I'll sell, and that's all. Yesterday's pop higher on in during the session that POTUS and the Prime Minister of China are going to meet at G20 meeting was just didn't make any sense at all. But here's the thing: as traders, things don't have to make sense. You almost need to be like a detective or a police inspector. You can't be swayed by what could, should, or whatever. You just need to look at the facts, and the facts are popped higher. It did end up coming back, and we'll look at that in a minute. But overall, it's just it's not making much sense, and I think it's not making much sense for many, and that's why we have range contraction in the indices. We have volume contraction, quite a bit of it, about 30%. as well between yesterday and the day before. Here's what was expected yesterday. This, of course, happened on Periscope instead of YouTube. YouTube had some server issues yesterday. I couldn't broadcast on YouTube. It's on Periscope, which has a lower resolution. I prefer YouTube, as I said up earlier in the chat here. But we could see what the overall idea is. The primary idea is that we are likely to be responsive um, and push into the 2860 area is what I was looking for, the 6062, and I was looking to sell that area for a push down to 44, 50, 44 even. That's the main idea yesterday, and I've got to tell you, I was very, very confident in that idea. We had several things in alignment to be able to accomplish this. The secondary scenario is that we just drift down in what was a selling spree into the pit session open to take out the overnight low and potentially bounce up and then start working ourselves back into the prior day's point of control. Uh, and overall, here's what actually happened. I'll show you this on the trigger chart. So, a quick review. We open up, we put in an opening swing that's very clear. We exceed that opening swing downwards to 53.75. The opening swing low is 54.50. And then we have our first impulse for the day. I really don't have a reason to trade until this happens. Really just sit on my hands and just wait for something to happen. And this is something that I'd like to see. We get an 8-point rotation, which is about the threshold for an impulse move right now, likely to collapse over the next week or so in terms of what we consider to be a normal rotation and impulse. And then it retries. So I look for the pullback to mid, couldn't quite get to mid, retries that high, and then just pushes down about 5 points before it starts drifting back up. So once we started to push down here, it looked like 2861. Remember, I said the area that I was really interested in is 2860 to 62, somewhere in there. And that area was in play most of the day, also in the order flow. And this set up the short. The second push into 6150 set up the short. Was looking for a continuation trade into 62, 62 half. Look for the short, and then look for the rotation out of the range. Is what I was looking for, and then to start pushing towards 28.44. If you recall, that's a closing price as well as the naked point of control. That's what I was shopping for. And then immediately after that, we got the news that came out, and it pushed to 68, which was the high of the day. And in the market, because it's just news BS, the market comes right back and goes back to the SOC, the scene of the crime, right in here, which was 28.5875. 28.5875. That was the point from which the auction was interrupted on this news right here, and it came back right back to it, and we ended up again pushing down and through the IB low, and then we drift back up and down and back up and down, and what turned out to be a non-directional day, an outside-in type of trade, and I was trading from the inside out early on, so not much fun there. And overall, the high that was put in up here is an excess. This is what an excess high looks like. No volume, price moves on no volume, and the market falls off immediately. That's an excess high. That's the opposite of a weak high. And overall, we closed in what looks like a balanced profile with a lower point of control, lower high, lower low, reestablishing the first day of one time framing down. And so the way the market closed yesterday, and notice the delta was negative into the close here, negative 13,800. The way this delta was flowing, it made it kind of obvious that at a minimum will seek lower immediately on the reopen. Might bounce later, but the expectation was this has completely failed. Buyers have completely failed to discover prices higher and push the auction higher. Here's what the here's what the overnight looks like. So we get a small pullback and then it just starts to sell off into the Asian session. The Europeans come in right in here, and it stabilizes for a little bit. But notice that the overnight session really stayed ahead or stayed below VWAP and mid and continued to do so. The overnight session is representing a trend profile or a trend day type trade with a B shape, which with a legitimate B shape where the market quickly, you can see the volume down here, up here is really not very good. So the market shifted swiftly through these prices. Remember the 44 from yesterday, that was the target before the interruption, the news interruption. This was this area here was the target, and that basically is the cutoff point, is the neckline on the B-shaped profile. And for those of you who've studied market profile, you know that B-shaped profile can happen in several ways. And the way this is happening is it's an indication of long liquidation likely. Essentially, the market squeezed the longs to the point where it found stable prices and it forms this B, this bulge down here, which is a B shape. The point of control is at 28.33 and it's in the middle of that high volume node. It's not at the bottom end. It appears to be stabilizing, but still it appears to be bearish in tone. Okay, so that's the narrative of what's going on. The overnight inventory is 98.5% or so short. So we might see a correction as we come in, an adjustment, so to speak. And then as we looked yesterday at this before the open, we looked at, we talked about, hey, there's a really important low volume node here at 56 and a quarter, 56 half. And what we need to watch out for is if it pushes above and holds that 56 half area, um, then we are looking for it to roll up and push into the 2866 or so. That would be the MC point of control. 2866 is the MC point of control. Looking for a test of that. And the high on that news was 68. Okay. So that's what's happened. Let's take a look just out of interest. And I know many people ask for this. Let's take a look at the order flow and how the heat map looked on CT Bookmap of what that's like, what that trade was like. And here it is. Boop, boop, boop. I'll try not to make this too long. This is the open. Remember, I'm in Chicago, so 8:30 right here. 8:30 is the open. Everything resets at that time. And here's that news. This is the news event. You can see a strong spike up on really strong volume with buying dominating the volume up, and the market essentially starts to flag and then walk itself back. And back here at 58.75 was the last normal print before the spike up on news at 9:15 Central. And then from there, we drifted down and right through this low volume node. Look at this low volume node. It had really decent liquidity there, and the market just kind of worked itself through. When I see this kind of liquidity and we have an important area there, these are the scale in areas. This is where I would look to build a position rather than take a price and wait. And this presented itself pretty well. The bounce, however, was not paying off. Was not paying off, and overall, my bias, given what we had done, was to the downside, which ended up working out for a little bit. It ended up pulling back, pulling back on the bounce off of this, and then once it fell through, it didn't go very far. I found the trade very choppy, and I found it very disadvantageous to take big bets on it. Um, so we spiked back up, and then I just want to show you later on in the session how we stacked things at the 60, which was really important. That 60 through 58 area right over here. We started stacking this area with bids, and again, that area is the important area outlined before the market opened. Now let's look at where it is now. Okay, where we are now. So overall, we've drifted down overnight. We've pushed back up. We just had that news event at 7:42 or so, and that news event pushed into where? Pushed into this liquidity at 28.37, which has refreshed itself. It came back in. But essentially, it traded all the way up to this, and it's a collision zone. And the reason this ball is not up here, the dot is not up at the offer, is because the dot represents a VWAP of all the trades that took place on the splash up. You want to keep an eye on this 28.37 on the open on the way up. Just keep an eye on that area because there's an active participant in that area. And that brings us to now. So what do we have above us and below us? Again, 28.37, 28.40, 28.42 will likely present some obstacles on the way up from an order flow perspective. 28.43, 44 is that all important target area from yesterday. That's the naked close and naked point of control from Monday. I will expect to be acting up in here, 28.43. I will expect to be acting in this area up here if it manages to push up. And I'm going to be very, very frank with you. I'm not seeing good structured trade setups. I'm seeing more of a good scalping environment, which I never recommend to traders who aren't already consistent or those who have issues with sticking to their discipline and so on. Scalping is not a good idea. So that's how things are shaping up. We're up against the overnight point of control at 28.33. We're opening right in the middle of the noise here, or the bulk of where the noise is. So let's move on to what we're expecting for today. Hello. What we're expecting for today. As I said, the range has really collapsed. I'm not shrinking the screen here. I tend to leave the screen at 120 in range like this. And so there should be, I try to keep the range consistent to be able to tell me what kind of real movement is. Many chart packages adjust the price scale, and we're a pattern detection machine. Our brain, our left side of our brain is a pattern detection machine, just like it is for, you know, all kinds of animals or whatever. We detect movement and patterns very, very well. And so if the chart is constantly adjusting the zoom level or the scale on the right side, it makes it very, very, very hard for me to determine how much of a magnitude this movement has been. And so I try to keep the scale solid and look at how that scale has collapsed. If I push this to the back, oh, the other one. If I push this to the back, you'll see that, we're getting some okay ranges back here, okay ranges, really collapsing range, terrible range. I mean, terrible IB, terrible range yesterday, terrible IB, terrible range. And what does that lead to? To those who've been following for a while, what could that be indicating? I can't wait for your answer. Unfortunately, when this happens, you instead of giving up, throwing your hands up in the air and like you just don't care or whatever, you're really looking at a market that is winding up, and there could be some pretty strong movement coming. The more the market coils, the more the break is likely to catch a lot of people. The downside of this is, of course, less volume. There's been less volume. So where are we today? So let's keep the scale steady and move down to where the market is. We're trading at 28.3175, out of range of the prior day. And so overall, the expectation is a little bit of a reversion back, but I'm expecting that this 44 area is likely to present a problem, and I'm expecting this to roll over and take out the overnight level. Yesterday, the overnight stat did not get touched at all. The overnight stat held, which is a very, very low probability, historical probability play. I'm looking for this to start walking itself back towards that 2802. The extent, given the range, if we get to 2844, the extent to which I expect the market to roll over is down to the 13 to 10 area, 28, 13 to 10, before we might see a bounce or we might see a pause. But the primary scenario really is following the pattern that's already developing, which is lower highs, lower lows, and a collapsed range that now may expand. And if it expands to the downside, it's likely to squeeze many, many longs, and it's done that overnight. Here's the catch, though. There's always a catch. The catch is this market has not been kind to sellers. It has not been kind to sellers. Very, very often we'll find that it tries to push down and we get a strong impulse down, and then we get a V bottom and an impulse the other way back up. The alternative scenario two, and this has probably an equal chance, is to squeeze down into the overnight low, 25.25, impulse up to 28.44, consolidate, and then walk itself back into 28.53 and potentially up to 56.50. 56.50, and the MC point of control, that's scenario two, giving us a pretty decent amount of range. The third scenario you would think is an open test drive. The third scenario is an open auction out of range that just has really just abysmal range, abysmal volume, just terrible volume. And what we end up with on scenario three, might as well draw it on here. What we end up with on scenario three is chip chop, cheap chop, cheap chop, looking like it's going to break, looking like we're going to break higher, chip chop, chip chop, chip chop, sitting sideways, waiting for something to happen. Okay. One thing I want to caution you on is that Monday is a national holiday here in the US. It's Memorial Day. So it's a long weekend. It is the first weekend of the summer. I know here in Chicago, people go nuts this weekend. It's like everybody's been in prison all winter and they finally can run free all weekend. So the beach is open, the pool's open, and the various high rises and so on. And how does that impact us? The tendency is that traders will leave early tomorrow. Traders will want to go out and enjoy the first day of summer, the first official day of summer weekend early. And so things will likely start dying down at about 10 to 11 Central, which is 11 to 12 Eastern. And traders will just get out and things will likely get very quiet. I don't anticipate being here on Monday. I don't intend to do a trader bite. Well, I'll be working, but I won't be online and I won't be trading. It just isn't worth my time. That's where I am, and hopefully you've gained something today. Hopefully you keep tuning in, and most of all, I hope you keep refining your approach and finding your way to better trading, which is what this is all about. All of this is about you doing better. And as always, if you have less than $3,500 per contract in your account and you're trading futures, then do not trade minis, trade micros. Trade micros. No, I don't get paid. I don't get endorsement money for saying that. I'm telling you what's good for you. Trade the micros to the point where you can build up some equity and then move up into the minis to make some real money. We don't expect to get wealthy off of the micros, even if we have a good, strong edge that we execute beautifully. But it's a great place to stay nimble on a small account. And I know most people have too small an account and are trading scared money. So move to the micros, follow your plan, treat it with respect, get off the sim. Good luck.